Hello and welcome back to DukascopyTV. For today's Commodities Corner, we're focusing on the outlook for precious metals, and joining me on the phone right now to share his outlook is Eugen Weinberg, Head of Commodity Research at Commerzbank in Frankfurt. Hi there, Eugen. So what do you expect to be the best performing precious metal of 2013?
It's likely to be platinum. It's going to be the combination of scarce supplies coming from South Africa, thanks to the strikes, due to the rising costs, and also due to relatively weak demand as of recently, and the gold prices, which were the champions of the last decade, they're likely to decline, at least in the first half of the year, or stay a little bit under pressure, because the demand for safe haven, which has been pushing the gold prices higher, is absent from the market at the moment.
Well, platinum prices have exceeded the price of gold recently after the world's largest platinum producer in South Africa stirred fears of a supply shortage. Do you think their supply picture continues to look challenged? I mean, are you expecting further cuts to supply?
Oh, definitely. So we are talking about almost 400,000 ounces of platinum missing from the market, thanks only to the mine closures, but it is likely that the relatively low prices and rising costs on the other hand will also push the other producers of platinum towards cutting their production, probably investing less and less, and therefore the production declines over the coming years. I think that it is creating a very favorable environment for the platinum prices for longer term, and I wouldn't be surprised even if the platinum prices would reach $2,000 over the coming months.
What about platinum's sister metal, Palladium, recently hit a 10-month high? Do its driving factors for prices mirror that of platinum? I mean, what is your outlook for Palladium like this year?
We are very, very positive and constructive on the Palladium prices. We are likely to see further substitution of platinum in auto catalyst by Palladium, not only in the gasoline engines but also in the diesel engines. The demand is likely to stay high. In contrast to platinum, Palladium is mainly produced in Russia as a byproduct, and therefore the demand for Palladium and also the pricing environment for Palladium doesn't matter much for the level of production. So we are likely not to see a supply reaction which could be due to the massive price increase as we saw on a Palladium market. So the demand here is likely to stay relatively stable, not increase, whereas the demand is likely to push forward. So we are very constructive. We think that the prices of Palladium still have a way to go up this year and may even reach the levels of around $800 over the coming months, over the longer term.
Moving on to gold, forecasters are divided about the performance expectations of gold this year. Talk me through the possible cycle in gold prices in both the first and second half of 2013.
Many experts, which have been very constructive and very positive on gold over the last years, turned negative and expect the gold prices either to reach the all-time high or to have already reached the all-time high already this year. I think that it is too early to write off gold, and although for the coming months I wouldn't be surprised if the gold prices stay under considerable pressure, because the demand for gold as a safe haven but also as a capital protection is likely to stay very subdued, because the European debt crisis seems to be abating, the inflation fears seems not to be there yet, the growth comes back worldwide. So the demand for low-risk assets, safe haven assets like gold, seems to be abating. So I wouldn't be surprised if the speculative investors cut their positioning on the gold price, on the gold markets further, and therefore pushing the gold prices even lower for the short term. But the longest term story is staying completely intact. We are seeing as the only outcome of the huge liquidity influxed by the central banks, the coming inflation, stronger inflation over the coming years, and gold is well positioned to profit from the rise in inflation, from the rise in inflation fears, from the rise in demand from investors over the longer term, and likely to reach record prices already this year. We expect the prices to increase towards $2,000 from the current levels of way below $1,700 already by the year end.
In that case, Eugen, what about silver prices in the coming month and the latter part of the year?
Silver seems to be performing very much like a little brother of gold, and we think that this is likely to continue over the longer term. Definitely, silver is much more susceptible and much more sensitive to the economic cycles compared to gold. There is no demand from the central banks here compared to gold, and in general silver is a less investment metal compared to gold. But for this year we are very constructive. We think that the prices have very good chances to increase towards $40 from the current levels of around $31 an ounce, basically on more investment demand.
Eugen, thank you very much for sharing your insight on precious metals with us on Dukascopy TV. Viewers, I'm afraid that's all we have time for on today's Commodities Corner, but stay tuned as coming up are more exclusive interviews and the latest edition of the Press Review. Goodbye for now.